Welcome back everyone to another episode of Stock Review. Today, yet another Russell 2000 stock, which is going to be the Joby Aviations. So without further ado, let's jump right into it. So today we have the Joby over here. Looking at the chart, right, so it has been performing quite well for the recent years, starting from 2023 up until now. So with the gain of around 460%, that's like 4x to 5x. However, this stocks, right, after it has been launched through IPO, we can actually see it just drops continuously, drop until 2023 starts to go up. So whether or not if this stocks is actually a great investment tools, we'll be looking at their business model, their competitive advantage, as well as their financial status. So over here we have the revenue for the Joby Aviations. Here we can actually see the charts just disappeared. This actually means that the company is not generating or not carrying out revenue right now. So the value is just zero on 1 million perhaps. So after looking at other website, right, so this is the Yahoo Finance, we can actually observe a total revenue. Yep, it's quite also someone does not have that record, just zero. And during the 2023 we have which is 1 million as shown in just now, and also in 2024 it's going to be 100,000, which is quite less. This company is pre-revenue, meaning that it does not actually generate that much of a revenue due to its status. Maybe they don't have anything that can be commercialized yet. So moving on, let's go to the net income, and we can actually observe a pretty terrible results from the net income. As we can see, the value is just decreasing dramatically, and it's kind of like seasonal and cyclical. It peaked at the 2023 and again peaked at the 2024, meaning that over the consecutive years from 2023 until 2024, the company is not making any positive income, not making any net income, which would actually generate more cash to the company. So for right now, the situation is kind of like being concerned, as this company is not making or generating any income. So for their free cash flow, we can also observe a decreasing value in terms of free cash flow, and just getting more negative throughout the year, starting from the starting of 2022 until now. As for the R&D expenses, this value actually increased, indicating that hey, the company at least they are putting more money into their R&D research in order to provide a better services, as well as to improve their current servicing. So after looking at their financial status, it's kind of looking like this company does not actually have that of a stable or considered as above average financial status. I would say it's actually below average, much more below. But the reaction of this stock, which just pumps over like 250%, that is crazy. And what is it actually driven? Or is it just because of its business model, or it has a very strong competitive advantage compared to other market or other companies? A secret and very strong moat which actually continuously become their strengths, and in the long run maybe they will become one of the positive cash generating company, which such as like Apple and Nvidia, so on and so forth. So over here we would like to go into what this company actually do and their stream of income. So what they actually do is they are actually a US based aerospace company founded in early 2009, that they focus on building all electric vertical takeoff and landing aircraft, which actually designed as a urban air taxis and go to provide fast, quiet, zero emissions air ride-share services in cities around the world. They build aircrafts to provide like urban air buses inside the cities or within the airport to the cities. They start from design and building the aircraft, providing the urban air taxi services, and also via certain apps or platforms of their own, such as like the Uber, which also includes the routes from the airport to city, as I mentioned. And they also develop infrastructures, which is the including vertiports, which is to partner with property groups, with other firms to build and create rooftops operation hubs in order to land their aircrafts or to fetch people from the rooftop to the airports. And they have partnerships with firms such as Toyota, Delta Airlines, Uber. Conduct certification and regulation works with FAA in USA, and similar airworthiness authorities, and also engage with defense and R&D programs, which actually acquires capabilities as well as first delivery to the US Air Force under related initiatives. So their stream of income is actually first is going to be their flight servicing, which is the urban air taxis, and they once operate began starting early 2016 in Dubai, and also followed by the market in the US such as the New York and Los Angeles. Besides, since they also design and build aircraft, so they will be having aircraft sales, which business to business selling to airlines, governments. And thirdly is going to be the maintenance and support servicing, including servicing operating of the fleets, the rooftop hubs, schedule maintenance, spare parts, as well as their software updates, and also along with the technology and software licensing and their government contracts, which as mentioned earlier, which supports their R&D and certification works, but actually not for traditional usage or commercial usage, as is all contract for defenses such as the US Air Force. So after knowing what they actually do, let us go through some of their strengths as well as weakness of Joby Aviation. First is going to be their first mover in urban air mobility. So it's one of the earliest and most advanced company, right, in terms of electric vertical takeoff and landing space. And they also have the proprietary EVTOL, which is the electrical vertical takeoff and landing aircraft technology, which actually range about 150 miles, speeds up to 200 miles per hour, and quiet operation for urban usage and environments, and as well as they have vertical integration. So this actually comes from starting from design and build the aircrafts, provide the Airbuses servicings, and also have the servicing and maintenance services, also partnerships with firms or property group to create rooftop hubs for the stationing of the aircrafts, and also provide R&D and licensing for the US aircraft. So they actually covered up almost all the chains in this market. Fourth is going to be their strong strategic partnerships, which include the Toyota for manufacturing, Delta Airlines, which to collaborate with airports to city services for taxis, the US Air Forces supply aircraft for government contracts and logistic testings and so on and so forth. And they also have solid base funding as well as regulatory process. So moving on to their risks, which is the weaknesses, is that they have no commercial revenue. So this actually explains the observation that we obtain from the revenue of Joby's company, whereby it's just 0 million or less than a million for their recent revenue. It's actually operating losses exceeding 150 million per quarter and burn cash unless commercial ops begin soon. And second is going to be their regulatory uncertainties, and also have high capex and R&D burn rates, which requires a lot in terms of manufacturing, testing, their infrastructure in terms of rooftop as well as their regulatory compliance. The analyst estimates that they will actually break even only until during the year of 2027 or until 2029. So they also are very complex to operate and also not proven market demand, because if you imagine having to book a flight or aircraft to travel from one spot to another spot, people will think that it's quite expensive, it's not safe to fly on the air, right? I prefer walk or drive my car. So this is going to be a market situation and depends on the switch and the mindsets of the economic as well as the consumers, and also have high competitions. So after looking at what they do as well as their streams of income, it's actually quite interesting knowing that this company is actually creating aircrafts for the urban buses, taxis, servicings, and also have a chain services from design, building, creating rooftops, maintenance, as well as providing R&D services for the US force. Right now, we'll be going back to our looking at the ratios. We have the debt to equity ratio sitting at the value of 0.05, which is solid as I want it to be at least less than 1. And also looking at the ROE, is in the form of negative. So it also starts to become more negative, which actually jeopardizes the quality of this company, and also similar for the ROIC, which is also in a negative form. And lastly, we'll be looking at the net cash, which is debt, and surprisingly, we'll be able to obtain a positive value, meaning that they actually have more cash than their debt, since, as mentioned, for their strength is that they have a strong and fundamentals in terms of funding base, help them in order to design, manufacture, and in terms of testing, and they also sign contracts with the US Air Force, which actually quite explainable when it comes to having more cash than their total debts. So after looking at everything, right, my take on this company is that it has a very weak financial status, financial fundamentals, because of not actually visible or observable revenue, decreasing net income, decreasing free cash flow, decreasing ROIC, decreasing ROE. So every criteria that I required the company to be in the form of growing, being able to be predictable easily, as well as being continuously provide more cash and more net income, it just doesn't meet my investment criteria, which makes me to the stand whereby I will completely avoid these stocks for now. But I do feel that the business model as well as their competitive advantage is very strong, that I am actually looking forward to their future quarters and future earnings reports to see, hey, whether or not they will be able to create more cash and generating more net income, because I do believe that the servicing that they provide is quite interesting and will especially attracts those who are rich, as well as provide a servicing that most of the company does not provide. However, one of the concerns is going to be their demand of the market, so whether or not people actually needs it, or just needing the robo taxi provided by Tesla in order to travel around. Or maybe afterwards Tesla will provide or create a car that can fly, so meaning they will actually replace Joby Aviation, but who knows, right? But upon just looking at their financial status as well as the business model along with the competitive advantage, we cannot conclude their economic mode. So for here, we'll be looking at their economic mode score. So first we have the brand and loyalty pricing power at power of 6, because it's actually an early mover in the market and recognized among partners, but the consumer recognition is still developing, which means that the demand of the market is very uncertain, and high barriers to entry is scored at 8. So meaning, yeah, it's pretty hard because of the deep IP. They have a lot of patents for their technologies in terms of the aircraft and their regulatory compliance, as well as the strategic economic system partnerships with certain companies as well. For the high switching cost is also starting at 6. For the network effect, they have building an ecosystem with airline, OEM, the Toyota, and operating data system. So the scoring is actually at 7. And lastly, it's going to be their economic scale, with significant partnerships. They also have vertical integrations, which can be huge in terms of chain in this market. But scale still emerging, meaning that they're still trying to build the business larger. So the score is actually at a solid 7. So the mode right now, the final score is actually 6.8 over 10, which is actually considered as moderate to narrow mode. So the conclusion is that Joby Aviation holds narrow to moderate economic mode, scoring at 6.8. So the mode is built around its pioneering technology of aircrafts, their regulatory leads, their partnerships with Toyota and Delta Airline, as well as early ecosystem alliance. But true defensibility will depend on successful commercialization, scale up, and competitive differences. So that is all after looking at the economic scale, meaning that the company is still in a stage whereby they are trying to grow further, trying to make their services and products to become commercialized and starts to earn that revenue per ride or per services of the bus, aircraft, taxis that they provide to their consumers. So in this stage right now, Joby Aviations, my take, which is summary on this company, is that the financial status is definitely not in the range of my lookouts, and it's not what I want to invest in right now because of the situation being have unpredictable revenue, decreasing net income, decreasing free cash flow, decreasing ROE, and decreasing ROIC. For the business model and their competitive advantage is actually quite interesting, showing the strength of the Joby company providing a first mover advantage in this aircraft systems, and also providing a vertical chains services from designing, building the aircrafts, providing Airbus services for operations and servicing maintenance, as well as partnership with different companies, and as well as the US forces for rooftops R&D, and as well as the manufacturing process. Overall, I do think that the company requires future outlook as well as future observation to see whether or not if the latest quarters in the next 1 to 2 years, it will be able to recover from the negative and decreasing states to become positive, and in terms of increasing trend, providing increasing net income, revenue, ROIC, showing a strength in providing more sales and increasing revenue, as well as providing more cash and net income. And only then this is a company which will be a great investment tools to add into my portfolio. But right now the situation is really terrible, and I would really like to avoid this kind of company, especially when it just hypes up. But I do understand their competitive advantage, which brings a lot of hype as well as high expectation for other consumers. However, the result or the status and the numbers explain that the company right now, it just does not make sense. It does not make a lot of money, doesn't make a lot of income, and it should not be at this price range. So would I actually invest right now? Definitely not, because it's staying at a all-time high right now, or actually breaking up the all-time highs. However, the extension is just too large, and if I were to buy right now, I will actually wait more, and also to wait for future quarters results to see whether or not if they successfully commercialize their product and services and actually gain and earn from what they're doing and what they provide. So I guess that is all for today's stock review, which is Joby Aviations. And if you are interested in this company, which is actually quite interesting and strong business model with good competitive advantage, just that their situation is still not being able to profit from their products, which is not yet commercialized, and it's actually being said that they will provide the services in Dubai in early 2026. So maybe take another one, or I don't think that maybe like 3 to 5 years to see the results on whether or not this company will be able to survive in this competitive US market. So that is all for today's video, and if you actually like the video and gain some insights and information from this, you can actually support me by clicking the thumbs ups, share this video, subscribe to my YouTube channel, and if you have any stocks specifically that you want me to review, just comment down below, and I will see you guys on the next one. Ciao.